Unit 26, Types of Collaterals and their Characteristics. JAIIB, Principles and Practices of Banking, Module B. Page number 97. Various kinds of securities for bank advances. The bank provides loans and advances against securities so that in case of non-payment, these can be enforced to recover their dues. These securities can be primary securities and collateral securities. The other classification of securities can be liquid security, open bracket, easily convertible to cash, close bracket. The government securities, open bracket, bonds, promissory notes, treasury bills issued by government, also called gilt-edged securities, close bracket. Stock exchange securities, open bracket, shares, debentures, close bracket. Blue chip security, open bracket, shares of good companies, close bracket. Trustee securities, open bracket, under section 20 of Indian Trust Act, close bracket. Features of good securities. The basic objective of obtaining securities is to recover the loan dues in case of need from sale of securities. It is important that such securities can be realized in case of need without any problem. Hence, the securities should meet the following criteria. Marketability. The security should have a ready market where regular transactions of sale and purchase are taking place. The market should preferably be available locally so that it does not pose the problem of carrying, etc. Agricultural land in a remote village where no one wants or has the capacity to purchase the land cannot be considered to be good security. On the other hand, an urban land which may find a number of buyers is a good security satisfying the criteria of marketability. Ascertainability. The security should be ascertainable in its physical form as well as in value terms. In other words, the bank should be in a position to identify the security without any problem. Similarly, it should not be difficult to verify the value of the security. Stability. This is another basic feature of a good security, as a high fluctuations in the price of a security can leave the bank with low margins of safety available. Those securities are certainly better ones, the market price of which continues to be stable over a time period. Transferability. The title of the security should be easily transferable so that it does not pose any problem in transferring the title in favor of the buyer thereof. The above features of the security are also known as the principle of the mast. Features of various types of security. 1. Land and buildings. On such securities, mortgage is created and it may be primary security or collateral. These can be sold without filing suit if the security is covered by provisions of SAR FAESI Act. Where it is not covered by this act, the sale can be through a court only, including through DRT. Before accepting this security, the title of property is to be examined by obtaining non-encumbrance certificate at least for 12 years. Limitation period of in such cases is 12 years. Documents can be sale deed, gift deed, will, partition deed that conveys the title in favor of the borrower. Tax receipts relating to property will help to know that there is no outstanding tax liability. The property will require a valuation report on the basis of nature and cost of construction, age of property, location, etc. 2. Goods and stocks. Goods and stocks may be in the form of raw materials, stock in process, finished goods, etc. Nature of charge can be lion, pledge or hypothecation. Advance against these securities are in the form of working capital loans. Precautions to be taken by the bank include A. No advance for holding of goods. B. Borrower should be dealing in goods for some time. C. Goods should be fully paid. D. Stock should not be old. E. Ownership should be verified through invoices. F. Stipulated margin should be maintained. G. Goods should be insured for their full value. Storage of goods should be such that verification is easy. Hazardous goods should be kept separate from non-hazardous goods. Stocks are to be regularly inspected, say at monthly intervals. While doing the physical checking, the records or books should also be checked. In case of large amounts, say rupees 1 crore or above, stock audit by qualified people is desirable. It helps in identifying the irregularities. Valuation is done on the basis of cost price or market price, whichever is lower. Page number 98. 3. Documentation of title to goods. These are defined under Section 2(4) of Sale of Goods Act and include documents such as bill of lading, railway receipts, dock warrants, delivery orders, etc. Goods represented by these documents are transferable by endorsement or delivery of documents. These can be called quasi-negotiable instruments since defective title is carried to the transferee if title of the transferor is defective. Merit of this security is that transfer is easy and holding of documents is easy. Demerit include the following: A. Possibility of fraud and dishonesty. B. Forged and altered documents. 4. Trust receipts. It is a letter of trust obtained by bank from borrower when goods in possession of the bank are released to the borrower without payment. Goods are held by the borrower in trust for bank. In case of sale of goods by borrower, the sale receipts are held by the borrower in trust for the bank. The trust letter should provide the following: A. Borrower should recognize right of the bank in goods. B. The borrower should undertake to hold the goods in trust for the bank. C. Borrower to undertake to direct the buyer to pay the proceeds directly to the bank. 5. Life insurance policies. While making advance, it should be ensured that A. Policy should be in force by payment of premium up to date. B. Latest premium payment should be held on record. C. Policy should be original, duly stamped. D. Policy should be free from encumbrances. Following policies are not accepted as security: A. Children enrollment policy. B. Policy taken for specific purposes. C. Policy with nominations under Section 6 of the Married Women's Property Act. Policy should be got assigned and it should be witnessed. It to make the assignment operative in case of death of the assured, the assignee can receive the policy amount. 6. Shares. Advance should be for productive purposes and not for speculative purposes. The nature of charge is pledge or lying. Advances should be against fully paid shares only. Shares should be quoted on a stock exchange for easy liquidity. No loan against shares of a private company should be given. Banks' exposure to capital markets. Limits on banks' exposure to capital markets. The aggregate exposure of a bank to the capital markets in all forms, both fund-based and non-fund-based, should not exceed 40% of its net worth as on March 31st of the previous year. Within this overall ceiling, the bank's direct investment in shares, convertible bonds, debentures, units of equity-oriented mutual funds, and all exposures to ventures capital funds (VCFs), both registered and non-registered, should not exceed 20% of its net worth. Statutory limit on shareholding in companies. As per Section 19(2) of Banking Regulation Act, a banking company can acquire shares in a company as a pledgee, mortgagee, assignee, etc., not exceeding 30% of the paid-up capital and reserve of the bank, or 30% the capital of the company, whichever is lower. Loans and advances against shares to individuals. Loans against security of shares, convertible bonds, convertible debentures, and units of equity-oriented mutual funds to individuals from the banking system should not exceed the limit of rupees 10 lakh per individual if the securities are held in physical form, and rupees 20 lakh per individual if the securities are held in demat form. Banks may extend finance to employees for purchasing shares of their own companies under ESOP to the extent of 90% of the purchase price of the shares, or rupees 20 lakh, whichever is lower. Banks should not extend advances including to their employees or employee trusts set up by them for the purpose of purchasing their bank's own shares under ESOP or IPO or from the secondary market. Page number 99. This prohibition will apply irrespective of whether the advances are unsecured or secured. Margins of advances. A uniform margin of 50% shall be applied on all on advances or financing of IPOs or issue of guarantees for capital market operations. Margins on bank guarantees on behalf of stock exchange brokers or commodity exchange brokers. A minimum cash margin of 25% within the margin of 50% shall have to be maintained in respect of guarantees issued by banks for capital market operations. Advances to stockbrokers or market makers. Banks are free to provide credit facilities to stockbrokers and market makers on the basis of their commercial judgment within the policy framework approved by their boards. However, in order to avoid any nexus emerging between interconnected stockbroking entities and banks, the board of each bank should fix within the overall ceiling of 40% of their net worth as on March 31st of the previous year. A sub-ceiling for total advances to 1. All the stockbrokers and market makers, both fund-based and non-fund-based, that is guarantees. 2. To any single stockbroking entity including its associates or interconnected companies. Prohibition. Banks should not extend credit facilities directly or indirectly to stockbrokers for arbitrage operations in stock exchanges. 7. Book debts. Book debts are the claims of sellers against the buyers arising out of credit sale, which can be by way of bills receivables, by drawing bills or account receivables, or book debts by debiting the purchaser's account. Risk in case of advance. Against book debts, A. Book debts can be fictitious, old, or disputed. B. Proceeds may be deposited with the bank in case of realization. C. Giving notice of assignment to each debtor is practically difficult. Factors to be considered for allowing advance: A. Integrity of the borrower. B. Creditworthiness of the buyers. Modes of finance can be: A. Overdraft. B. Factoring. C. Forfeiting. Precautions include: margin should be higher, say 50%. B. Age of book debts should not be more than 90 days. Verification: it should be done from invoices and debtors' ledge. Book debts should not represent: A. Transactions with sister concerns not related with business activity. B. Advance payments. 8. Bank term deposits. Nature of charge created is assignment, open bracket, practically called pledge or lying by bankers, close bracket. Margin and rate of interest are fixed by banks at their discretion. Loans are repaid before due date. If not paid, these are adjusted out of maturity proceeds. Loan against FDR in the name of a minor not to be granted. However, if the loan is for necessities of minor, the guardian may be permitted loan on specific undertaking to take effect. FDR should be got discharged from all the account holders. Loans given to a partnership firm against FDR of a partner or to a proprietorship firm against FDR in the name of proprietor are to be treated as first party advances. No loan to be allowed against deposit under capital gain scheme. 9. Gold ornaments. Nature of charge created is a pledge. No loan against pure gold. Advance may be in the form of overdraft or demand loan. Amount of loan and margin depends on the market value and fluctuations in the market value. Rate of interest is linked to purpose of loan. On adjustment of loan, the ornaments are to be returned back. If there is some other outstanding loan, the bank can retain the security by exercising right of general lien. In case of non-repayment of loan, the security can be sold under Section 176 of Indian Contract Act. Valuation is done by the appraisers approved by the bank. Loan granted is subject to NPA norms as in case of other advances. 10. Supply bills. The supply bills arise when the sale are made to government or government undertakings. The bills may be interim bills against which government pays 80 to 85% of the total amount, and final bills for balance. Page number 100. Amount which are paid on completion or verification of goods at point of destination. The advance is of self-liquidating nature. Parties are entitled for progress payment based on work done after the goods are sent to the government undertakings. The documents such as RR or GR along with inspection notes issued by government undertakings are produced. The RR or GR is sent to the government undertakings and its particulars are given in the supply bills. Advance is of clean nature without any security, and payment may take long time in certain cases due to delay on account procedural and administrative reasons. Precautions to be taken include obtaining power of attorney from the borrower to get payment from government undertakings, which should be registered with the undertaking. Terminal questions. 1. On land and building, only pledge can be created. True or false?
Note for the students, the answers are given end of the page. Please follow the answers.
2. Sale of immovable property without filing suit is possible under provisions of SAR, FAE, SI Act and not in Transfer of Property Act. True or false? 3. Land and building can be accepted as collateral security only and not as a primary security. True or false? 4. Non-encumbrance certificate in case of land and building is obtained minimum for a period of 13 years. True or false? 5. Partition deed or lease deed are not valid documents for creation of equitable mortgage. True or false? 6. Non-encumbrance certificate is preferably obtained through an advocate. True or false? 7. On goods as security, pledge or hypothecation can be created as per agreement between the bank and borrower. True or false? 8. On security of goods, only short-term loans in the form of working capital limits are given. True or false? 9. Ownership of goods can be verified on the basis of invoice in favor of the borrower. True or false? 10. In case of inspection of goods, it is mandatory to check each and every item relating to stock. True or false? 11. Stock audit by qualified professionals is mandatory for all working capital advances. True or false? 12. Valuation of goods is normally done by banks on the basis of cost price or market price, whichever is higher. True or false? 13. The margins in case of advance against goods are fixed by RBI and cannot be deviated. True or false? 14. In case of default by borrower in case of goods as security, the sale can be made without court intervention in case of pledge of goods. True or false? 15. Banks can take the goods in possession in case of the hypothecation of goods under provisions of SAR, FAE, SI Act. True or false? 16. Document of title to goods are defined under Sales of Goods Act. True or false? 17. Possession of documents of title to goods by bank amounts to possession of goods with the bank. True or false? 18. Document of title to goods are quasi-negotiable because in case of defective title of transferor, the transferee also acquires defective title only. True or false? 19. Advance against the document of title of goods. The advance can be risky as the unpaid vendors has the right of stoppage of goods in transit under provisions of Sales of Goods Act. True or false? 20. When the goods are released by the bank to the borrower without payment by obtaining a letter of trust, such letter is called letter of hypothecation. True or false? 21. In case of advance against life insurance policy, charge pledge is created as policy remains in the possession of the bank. True or false? 21. In case of advance against life insurance policy, charge pledge is created as policy remains in the possession of the bank. True or false? 22. Banks do not allow any advance against policies having nomination under Section 6 of Married Women's Property Act. True or false? 23. Assignment can be in writing or oral, like in case of mortgage. True or false? 24. After assignment of the life insurance policy, it is in interest of the bank to get the assignment acknowledged by the insurance company. True or false? 25. In case of default by borrower for advance against life insurance policy, bank recovers from the surrender value of the life policy. True or false? 26. Maximum holding of shares of a company by a bank is restricted to 30% of the capital of the bank or 30% of the capital of the company, whichever is lower. True or false? 27. Restrictions on maximum holding of shares of a company is as per provisions of section 19 open bracket 2 close bracket of RBI Act. True or false? 28. Advance to individuals against security of demat shares are restricted to rupees 10 lakh. True or false? 29. Advance to individuals against the security of physical shares are limited to rupees 10 lakh. True or false? 30. Margin against the security of shares is minimum 40% of market value. True or false? Page number 101. 31. Margin on bank guarantee given on behalf of share brokers is 50%, out of which 25% is in the form of cash margin. True or false? 32. Bank finance can be allowed to employees to buy shares of their own company to the extent of 90% of their purchase price. True or false? 33. Bank finance can be allowed to employees to buy shares of their own companies to the maximum extent of rupees 10 lakh. True or false? 34. Charge on book debts as security for the loan is called hypothecation of book debts. True or false? 35. Book debt financing can be in the form of factoring or forfeiting or advance against book debts. True or false? 36. In case of loan against bank deposit, the minimum margin should be 20%. True or false? 37. Advance allowed to a partnership firm against FDR in the name of a partner is deemed as third party advance for the purpose of charging rate of interest. True or false? 38. Loan against pure gold cannot be allowed by banks. True or false? 39. If advance against gold ornaments is repaid, the gold cannot be retained by the bank under using general line for another loan. True or false? 40. If loan against security of gold ornaments is not repaid, bank can sell the security without filing suit under section 176 of Indian Contract Act. True or false? 41. In case of advance against supply bills, the document of title to goods supplied remain with the bank. True or false? 42. Supply bills arise when the goods are sold to government departments or public sector undertakings. True or false? Answers: 1. False. 2. True. 3. False. 4. True. 5. False. 6. True. 7. True. 8. True. 9. True. 10. False. 11. False. 12. False. 13. False. 14. True. 15. True. 16. True. 17. True. 18. True. 19. True. 20. False. 21. False. 22. True. 23. False. 24. True. 25. True. 26. False. 27. False. 28. False. 29. True. 30. False. 31. True. 32. True. 33. False. 34. False. 35. True. 36. False. 37. False. 38. True. 39. False. 40. True. 41. False. 42. True.